Hey everyone, Couch Investor back to another video for today. So, PayPal just reported their earnings report, double beat, but there is something I want to show you that I don't really like just yet. Maybe during the earnings call, they'll give us a bit more information on that. In this video, we're just going to go over the numbers in that report. Next video will be probably Airbnb and then Mercado Libre and then Roku. So, let's first start with obviously the thing that everybody knows by now, that PayPal is trading at an extremely cheap valuation. If we compare it today to its 5-year mean, I mean, you can look at it price to earnings, EV to EBITDA, price to sales, all in the next 12 months, and then price to free cash flow in the last 12 months, it's all much, much lower than its 5-year mean. I mean, right now, forward PE under 10 times. Yes, after hours were up 1.28%, so the market clearly is not extremely impressed by the numbers, but I mean, even if the numbers aren't great, PayPal is not priced to perfection, nowhere near that. So yeah, they maybe have the luxury of not showing us the best of the numbers, but as investors, you still want to see some improvements. So yes, there is a double beat, but I'll show you in just a bit what I did not like. So let's first start with the comment of the new CEO and President Alex Chriss. So my first 30 days leading PayPal have confirmed my belief in the company's strong assets and market position. Now we must harness this strength and put the weight of the organization behind our most important priorities. I like this. To put the weight of the organization behind our most important priorities, probably we might see the same thing that we've seen with Intel, selling some parts of the business which they seem to like a bit less than the overall business. Okay, could provide us with more cash. In the process, we will become more efficient so we can innovate and execute with higher velocity. The opportunity to drive greater impact for our customers and unlock profitable growth makes it an exciting time to be at PayPal. Of course, we already talked about the fact that they sold Happy Returns, so that's already one step. Pretty good comment here from the CEO. Now, as for the highlights, net revenue increased 8 to 9% year over year, depending on you're looking at GAAP or non-GAAP. Operating income is up 4% year over year on a GAAP basis, 8% on a non-GAAP basis. And then EPS on a GAAP basis is still down 19%, but on a non-GAAP, it's up 20%. Now we're going to go over the numbers in depth. I'm not just going to read this, but I do want to show you and talk about this announcement here. So they are appointing a new CFO. So Jamie Miller will be the new CFO effective November 6th. So Jamie is an accomplished CFO with decades of experience in both senior finance and operation roles, guiding companies through dynamic environments and meaningful transformation, including GE and Cargill or Cargill, you can tell me in the comments, and was most recently CFO of Ernst & Young. Now, before we continue, if you enjoy this type of videos and you want to keep up with all the earnings reports, do me a favor by hitting that subscribe button. We're over 30,000 subscribers right now, so thanks again for all the support. If you want to support me even further, do check out the link down in the description and the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. All right, so key operating and financial metrics. Total payment volume increased 15 to 13% on spot or FX neutral basis. Operating income increased 4 to 8% as we've seen before, and EPS, we've seen that as well. Now, with the CFO, the current CFO, Gabrielle, she says PayPal delivered solid third quarter results with currency neutral revenue growth and EPS ahead of our expectations. Our performance demonstrates disciplined expense management and capital allocation. We are focused on accelerating our profitable growth. So as we go and look at operating highlights, double-digit volume and transaction growth year over year. So TPV, total payment volume, $387.7 billion. That's growing 15% and 13% on FX neutral basis. 6.3 billion payment transactions, that's up 11%. 56.6 payment transactions per active account on a trailing 12-month basis, that's also up 13%. And then total active accounts reached 428 million compared to 432 million same quarter last year. As for the balance sheet and liquidity, so cash equivalents and investment total $15.4 billion. Debt total $10.6 billion, and in Q3 they repurchased approximately 23 million shares, returning $1.4 billion to stockholders. On a trailing 12-month basis, they repurchased approximately 75 million shares of common stock, returning $5.4 billion to stockholders. And so we have to go back to this picture right here. Shares outstanding for PayPal keep going down. Yes, as the stock continues to crash, they can buy more shares, putting more stock out of the market. And that means that your shares that you personally own will be worth more. Of course, if you still believe in the company, that means that your shares and the company's valuation will grow as well. And by the way, if we look at the EPS estimates for the 5-year growth rates in the next 12 months, that is 14.57%, which is not too bad. Then, of course, an important metric here is cash flow, because if cash flow decrease, then, well, they will not be able to buy more shares. But hey, here in Q3, they generated cash flow from operations of $1.3 billion and free cash flow of $1.1 billion. But they say here that cash flow from operations and free cash flow include an $800 million negative impact from European buy now pay later loans originated as held for sale or HFS in the quarter. Excluding those impact, adjusted free cash flow would have been $1.9 billion in Q3 and $3.8 billion year to date. And they repeat what we've seen in the past earnings report. In June 2023, PayPal entered into a multi-year agreement with KKR to sell up to 40 billion euros of eligible consumer installment receivables. And in October 2023, PayPal began selling those receivables, and as of October 31st, 2023, approximately $1.4 billion of such receivables, which were classified as held for sale, have been sold. Now, as for the less positive things, if you look at operating margin, for example, right? Same quarter last year, 16.3%, we're now at 15.7%. This is GAAP. Even non-GAAP, we were 22.4%, we're now 22.2%. And if we want to go and have a look further, if you scroll all the way down, you reach this point right here when we talk about TPV. And then when you look at transaction margin, well, transaction margin same quarter last year was at 51%. Since then, it has come down each and every quarter. We're now at 45.4%. This is definitely something that is not great at all. Yes, the decrease quarter over quarter is much less than before. Maybe it is stabilizing, maybe not. Of course, some analysts will probably ask about this during the earnings call. So look out for the pinned comment. I'll definitely update that. But yeah, this is something that I think a lot of investors are probably be disappointed about. We would like this number to go back up because otherwise, what's the point? Then if we look at guidance, so for Q4, they expect net revenue to grow between 6 to 7%. GAAP earnings per diluted share is expected to be around $1.20 compared to 81 cents in the prior year. Non-GAAP is expected to grow around 10%. If we look at the fiscal year 2023, now GAAP earnings is a bit higher than what they previously told us in the last earnings report. It's now $3.75. I believe previously it was $3.45. And non-GAAP is expected to grow approximately 21% to $4.98. And so if we look at the graph, well, currently nothing really changed that much. Yes, this week we see a green candle, but to be honest, it's still a pretty small one. Yes, we did rebound a little bit when it comes to RSI, still pretty close to being oversold. But again, earnings call can move a stock much more than just an earnings report in the current state. Of course, we already had the FOMC meeting, no rate hike, no rate cut. Basically, we're staying where we're being at since, I believe, July. So nothing more to add. Yes, this has been an okay quarter. Again, we're now at a stage where PayPal really, to be honest, the expectations are so low that it's rarely the case that they'll disappoint us even further. Yes, transaction margin is still going down, but maybe we'll get more information during the earnings call. Overall, okay quarter, we move on. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.